Yeah, good afternoon. It's Jim from JAGfx.eas.com or eas.com. Yeah, this video, I'm just going to go over the basic concept of the DCA EA recently released by us. So it's a dollar cost averaging EA, and I'll explain the basic concepts in this video so everyone's got a clear understanding how it actually works and what it does. Now, there's a lot more to it than what I'm going to show you in this video, but this is just, as I said, this is just the basics to show you how it actually cranks up. So we'll go to MT5. Now, this is the setup we use. So we're just looking at any chart, could be any time frame. Personally, I prefer the high time frames. Can be traded on any time frame. Pairs, just choose pairs that move. There's plenty of pairs available on MT5. There's, whether it be crypto, stock indexes, individual stocks, etc. So just be aware. I'm predominantly a Forex trader. That's what I concentrate on. So this is MT5. This chart's a Euro USD 4-hour chart. Now we've got pretty well two indicators on the chart. These red and blue dots on the price chart is called the QMP filter. So I'll just show you this. So it's the QMP filter. All QMP stands for is QQE Advanced, and MP stands for MACD Platinum. It's just a combination of them. I'll show you in a minute what it is. So the default settings I use, if you've read any of my previous books, you know these indicators, I use them for all my trading. 12.26.9 is the MACD Platinum component of the QMP filter, and 183 is the QQE Advanced component of the QMP filter. So just the colors, red and blue there. Don't worry about the high time frames filters, just the top ones. Basically blue, if you see blue or green, let's buy. Reds generally sell. So this is the main indicator I use for trade entries. This does not repaint. It doesn't present halfway or midway through a candle. It will only present once the signal's confirmed and the candle's closed. So if you've got this red one, for example, here, until that red dot won't appear until this candle actually closes. Then once it appears, if it's a valid signal, you take the sell on the open of the following candle. Right, to understand what these dots are from, we'll just go to this other chart here I've got. Now, this is not a part of the EA as such, even though the QQE Advanced is. This is just showing you different settings. I'll show you in a minute what the settings on the EA use. So this is the MACD Platinum. You'll have to have this uploaded to your platform, but you don't have to display it on your chart. I use it for everything. It's just an indicator I've always used. So this QMP filter, these red and blue dots, are a combination of this indicator with this settings and the QQE Advanced with these settings. So pretty well, when they line up, we get a signal. So in this case, the red and blue dots appear on the MACD Platinum when there's a cross between the two lines. So there's two actual lines. I'll just go into the settings and show you. So there's the settings there, 12.26.9, it's just default. The colors, you've got the MACD and the average. They're the two lines that cross. So when these two lines cross, it just produces that line, that dot on the indicator. So in this example, we'll look at this red dot up here. There's already a cross there, so there's a red dot on the MACD Platinum there. Doesn't matter how many other candles there is later, but we're looking for a cross on the QQE Advanced. So basically when the two indicators are in sync, there's a cross down here, the yellow, the orange and the blue line, hence now the red dot. Look, I don't really need the QMP filter on the chart. I just use the crosshairs and the data folder. But these just makes it so much easier. A lot of the times they appear on the same candle. See what I'm finding? Oh, yeah, they're all one candle after one candle before. Here's one. They both appear on the same candle. Blue dot on MACD Platinum, cross on the QQE Advanced, same time. Happens a lot. Generally, the MACD platinum will cross first. This one's on the same candle again. This one is one candle later. So that's just to give you an understanding of these, where these red and blue dots come from. Now, a lot of people like to know all about the indicators. Now, I'll just go to, I've got these websites here I share with anyone that asks. They're pretty technical. The QQE Advanced, which is the bottom indicator, it's just a modified RSI. Here's one website, and I'll put these links to these websites in the description of the video just to make it a little bit easier. It's a pretty tricky little indicator. It's a modified RSI indicator. I don't understand the workings of it. I just know it works well for me. So if you want to get under the hood and have a read about it, you can have a look at these websites. As I said, I'll put the links in the description of the video. So that's the QQE Advanced. I've also got another website that goes into a bit more detail on it. It's compare it to an RSI. That's all it is. So it's an oscillator, and I'll explain what an oscillator does in a minute. But there's a bit of information there. Now the MACD Platinum, which was that middle indicator, it's just a zero lag MACD. It's just another name for zero lag. MACD Platinum is just a fancy name for zero lag. I'll put this website, explains what it is. Sort of. I don't understand any of this stuff, so I don't really care as long as it works. Mine are slightly different variations to what you're seeing on these websites, but it'll give you a good idea of what they actually do. So that's the indicators there. So we go back to MT5. Now this, I just used this screen to show you how you get these dots. So we'll go back to what the basic setup is for the DCA dollar cost averaging. Now this is an oscillator. This is the QQE Advanced. Remember I said the settings before were 183. On this one, it's not. It's 714.1. So instead of being 183, 714.1. I only need the one line displayed, which is the RSI MA line, which is that gold line there. So you can see on the other one I've got the slow line. None. I don't want to see it. Don't need to see it. Now this is an oscillator. What oscillator means is it goes from this middle line, a midpoint. It goes from through the midpoint up to a higher level, then eventually it'll come back to the midpoint, go to a lower level, then come back to the midpoint, and eventually go back to go to a high level, maybe several higher levels, and it'll eventually come back to the midpoint. Doesn't matter where you look, it always comes back to the midpoint. It oscillates. Same as the MACD Platinum, oscillates around the zero level. So what we're looking at using this indicator for this, like I said, it's a dollar cost averaging. It doesn't always go to dollar cost averaging mode. Let's have a look here. So these two levels on the QQE Advanced, so the midpoint in this case is the 50 level. If you look over to the right here, you'll see 50. Sometimes that might be a zero level. Doesn't matter what the numbers are. It's as long as you understand it's the midpoint. These upper level and lower levels, you can set them to whatever you wish. Obviously, the higher or the further away they are from the midpoint, the less chance they've got of being taken out in this. Because what we're looking for is this levels to get breached or touched or go through, whatever you call it. I say breached, and all breach means is it's at least a touch at some point and it's confirmed. So you imagine the further these lines are away from this midpoint, the harder it will be for to be reached or breached. Think of it as a rubber band. The more you stretch it, the more it wants to come back to that midpoint. Most people call these overbought or oversold areas. There's some people that don't believe in that with Forex. I don't care, as long as you understand the concept. I call it overbought, oversold. I don't care what anyone else says. So that's what we're looking at. So what we're looking for is price to go to whatever nominator levels we've got, and once it's below that level, we're assuming, and history shows, that it'll eventually come back to the midpoint. So it's come down here, it's gone below the 40 level. So now we're looking for ways to get into the trade, to buy it and bring it back to the midpoint, in this case the 50 level. It's come back to, it's gone through the 50 level, it's come back down. Again, we're looking to buy and we're trying to bring it back to the midpoint, which is in here. In this case, it's gone above the 60 level, and we're going to sell to bring it back to the 0 level. So that's all it is. It's just, so we're trading back to this midpoint, this mid-level. So in this case, the 50 level. That's all we're doing. Once price goes to one side of those blue lines, like here, it's gone above it. We're looking to sell and bring it back to the midpoint. Again, it hasn't gone to the lower levels, so there's no buy trades taken. Here, it's gone back to the upside. It's gone above it, so we're looking to sell, and bring it back to the midpoint. That's the basic concept of this EA. So here we go here. It's come down, looking to buy and bring it to the midpoint. It's above, sell, bring it back to the midpoint. Now, with the EA, we've got 4 exits. And the first exit, the most basic exit, is just bringing it back to that midpoint and closing out all the trades. So there's 1 trade or 10 trades in a sequence. As soon as it gets back to that midpoint, it's in profit, we just close out all the trades. It could be 5 pips profit, it could be 100 pips profit, depending on how fast the market moves, how many positions you've got, etc. We'll go through a few examples. We'll show you in action, just to give you an idea how it actually works. So and before I said, sometimes it'll take multiple trades and sometimes it'll take just 1 trade. Might not have to go in dollar cost averaging mode. Now, all dollar cost averaging means is you're basically catching a falling knife. Let's find an example here. Here's a good example. So we've got this sell signal up here, right? So there's your sell there. Now, as you can see, price has gone against me. There's been a blue dot, which means buy, but we ignore that. Then there's another sell. Now, that sell there, say you went in took that sell with 1 lot. Depending on what your trade multiplier is, you could go in with 1 lot again if you wish, or you can go in with a multiple of those 1 lot. A lot of the times I tend to use, especially on the high time frames, I'll use 3 times. So I'm loosely using a fib sequence, and I'll show you this after. So in this case, it'd be 1 lot there, and if I was going 3, it'd be 3 lots there. So I'm taking a sell there and a second sell there, no stops. So you can see that straight away there's a high risk here, and we're increasing position sizes, and it's going against us. So you might get a little bit nervous, and price comes down. Now, with having different position sizing, if you just had 1 lot here and 1 lot entry there, your overall break-even price, because remember we're dollar cost averaging, which just basically means we're averaging our break-even level. If it was just 1 lot there and 1 lot there, it would be directly in half. So whatever the distance is from there to there, which is approximately, say it's 76 pips from there to there, the break even in that case would be 38 pips, so halfway. So it'd be exactly 30. But because if we went in this position, this second sell with say 3 lots, it's a much bigger position size, so our overall break even would be much closer to this price than it would be that price. So it doesn't take much to come back. But obviously going in with a bigger position size increases the risk. So in this case, it'd come down. Remember, if you look down, we're looking for the midpoint, which would be, I'd say, be on that candle, on the close of that candle there. So if we're in with 3 there, we'd be closing out there. So 3 lots there would be roughly 44 times 3, which is 120 pips, say, for example. And we'd probably take a small loss on that for 40 pips. So roughly plus 80 pips just on those 2 trades there, just to give you a simple example. So we could use any time frame, any pair. So what did I say? This is a 4 hour. Look, I'll mix it up. I'll go to a 5 minute chart just to show you what I mean. So this is the 5 minute euro. Let's find a couple of examples. Right, here's a couple down the bottom for buys. This is a 5-minute chart. So we look at this one here for a start. First one, took a trade in here, didn't make the mid level. Second one, trade there. So that could be for 1 lot. This could be for 3 lots. This third one could be for 5 lots. Still not out of it. See what I mean? Your risk is getting higher. This one could be for 8 lots. And then we're through the midpoint here. So I'd say with that candle there, definitely confirmed. So the open there. So you'd have 8 times whatever there, 5 times whatever that, 3 times that. You're probably getting in the lost territory, and 1 time that. Now with the EA, if it's not in profit by the time it goes through the 0 level, just on the basic exit, it will look for an overall break even plus a set number of pips that you nominated. Like it could be a buffer of 5 pips or something like that. So in here, it'd probably get out and take a small profit, overall profit, something like that. So there's when it's gone on the dollar cost averaging. It's taken multiple trades. Now you dictate the size of these trades. So your initial base lot could be 0.1. It could be 0.01, or it could be 0.1, it could be 0.62, whatever you want. But just keep in mind that if you're using the multiplier, you will be increasing, so you've got to be aware of margin requirements, etc. So in this case, we're below the 50, the midpoint, the 50 level goes up through there. We come up here, there's a sell signal, we're above the 60 level, it's came down, there's a buy, we ignore that, it's eventually come through before we get to the second sell, just closes out on there for a small profit, something like that. Another sell here, goes down, closes out there. Now, like I said, there's other ways of exiting, and I'll probably do more videos on them. One could be just an absolute trailing stop or a pure trailing stop. Another one could be a profit target, whether it be in pips or in dollar value. And the third one's a combination of this 50 exit, the midpoint exit, plus a trailing stop. So there's 4 exit strategies. Just be careful on lower time frames because you can get into a lot of trades, especially when there's a big move. A move that can last a few days is not going to cause you too much grief on an 8-hour chart, but a move that lasts a few days on a 5-minute chart or a 15-minute chart could cause you a lot of grief. So you just got to be aware of that. So it eats into your margin, etc. So that's the basic concept of the EA. It revolves around this center line and it takes multiple positions in the same direction. Now, it could be the case you could be in buy sequences and sell sequences at the same time. You can control that on the EA. If you're in a jurisdiction that permits that, that's fine. I do that all the time. You could be in multiple buy sequences or multiple sell sequences. You can dictate if you just want to take buy trades or just want to take sell trades or both. You control position sizing, as I said. You always also control how far from the midpoint you are. So the further you are away, so you can see, you could actually just, the further you are away, the less trades you'll take, so the lower risk generally, but you can really step this up and just take trades either side of the 50 level. You don't really need the 60 or the 40. It could just be operating around the 50 level. You're obviously going to get a lot more trades, and there's something you have to be aware of. You can control the times of the day you wish to trade, and you can control which days you actually trade. Then you can also control what actions are taken. If you are trading and you want to close all your trades at the end of the day, there's options on that. There's also options on what you can do at the end of a week if you don't want to hold trades over a weekend. There is also risk mitigating factors with also. It may get to the stage where you're in full trade and that you get uncomfortable once there's 4 trades open in a sequence. You can set it up so the EA changes course and actually goes for an overall break even plus a small amount of buffer. You may have had a 200 pip target originally, but after, say you set it up so after 4 trades, if it hasn't reached that 200 pip target, it changes its exit exit strategy and just looks for an overall break even plus a small buffer if that's what you want, something like that. You can also control if the previous trade signal was in a certain amount of pips of the new trade signal. So you might have, because most dollar cost averaging EAs work on, I'll just go to a higher time frame because I don't really like the lower time frame. Most dollar cost averaging EAs work on a set grid level. So it's like every 30 pips it takes a new trade if it's going against you, something like that. Whereas this one takes it based on an actual dot or a signal between the MACD Platinum and the QQE Advance. So sometimes, you get in here, say you were in sell mode here, these are all very close. You might not want to take all these three trades. So if they were all within about 50 pips of each other, you might just take one sell trade or something like that. It's just a way of reducing the number of trades. So that's the concept of it. That's the basic. So what I'll do now is I'll pause the video and I'll set up a strategy tester and I'll show you in action. So just stand by. Okay, I've just got the strategy tester for MT5 here. There's the EA there in the expert advisor folder. JAGfx DCA using the Euro USD 4 hour. I'm going to trade it sometime between 1st of January 2024, 1st of January 2025. I just got a $10,000 account, 1 to 100 leverage. You can change all this if you wish. It's in visual mode, so we can have a look at visual mode. I'm going to do a couple of different settings. The first settings I'm going to show you, this is the multiplier system. Remember I said you can, so here's your initial base lot. So look at this one, base lot size. We're just going to use 0.01. Playing it very safe. You've got a drop down menu here. We'll just go with a safe or delayed one. So it'll just multiply by 1 times also by 1. Third trade will be by 1. Then the fourth trade will be by 2. Fifth trade will be by 3, and so on. So you've got different choices here. And if you want to customize it, you just come down to custom uses or use a string below, right? So we're just going to use a safe delayed one. I just want to show you the concept here. I'm not sure. I've got no idea if this is actually is a profitable one or not. We're on the 4 hour charts, like I said. What else we got here? We're going to use we've got to just trade at 24.5, which means all week. And the levels we're using are the 60 and the 40 level. And we're going to use the QQE, like I said, remember that I said there's 4 different methods of exiting. Here they are here. The QQE 50, which is the midpoint, and recovery mode, trailing stop, fixed profit target, or hybrid. So we're going to use the basic one, and we're going to go for 21 pips above break even if we're not overall profitable once we hit the midpoint line. And these will be displayed on the chart. So we'll set that up and we'll get running in a second. All right, I've got it running on the chart now. It's going pretty slow. It doesn't matter. I'm in visual mode. I just want to show you it in action. So I normally save a template, which I have that's set up to the same as the settings. And this is the 40 level. There's the 60 level. This is the QQE Advanced. There's the midpoint there. Below we have that. You can see the trades. So this is a safe one. So now you can see the yellow line on the chart. That's the overall break even. This is going to be slow going for starters, just to give you an idea what it does. So it's below there, so we're looking for buy trade. So just watch the screen. There it's taking a buy trade. There's only the one trade, hence the yellow lines in the one spot. We haven't gone through the 50 level. Now it's gone through. We've closed the trades. I'll just speed it up a bit so you can see it in a bit faster action. So you can watch it. You can slow down the video if this is going too fast for you. There's 2 trades on. Just look at the box down below. It's a bit stop start, which is a bit. There you go. There's 3 trades closed there. See if I can get this smoother. So it's looking for buys, closed out the buys. It's looking for more buys, going for the midpoint. Another buy there, so we've got a few buys. There's the average, bang, through we go. Going down, good profit. So you get an idea how it works. We'll try and get the... It's looking for sells, second sell, third sell. And this, as I said, this is lower risk, so it's just, I'll just pause this video. All right, I couldn't get it going any smoother, but you get the idea. It takes a lot of trades, but this is in testing. So this obviously take a few weeks to go through all these trades here. It's really not playing the game, is it? Just watch it for a little bit, and I'll just let it go, see how it goes. I'll see if I can speed it up a bit, see if that makes any difference. It's looking for sells. We've been above them. See that blue line there? That's the actual 21 pips, and that's that achieved. So I just leave that running, and what you can do is you can go back to your platform and just have a look and come down here. You'll see the green bar, how far we've gone through, and if I look at the graph here, and there's the graph for the trade so far. So, you know, we're not making a lot because we're only up to $149 profit, but you can see it's fairly steady. It's a low risk sort of strategy. Go back to it, see if it's jammed right up now. So it's taking sell trades. You can see all the sells. Yeah, this is driving me nuts as usual. It's come through. I'm not sure why my computer's all jammed up all of a sudden when I'm doing a video, but it shows you that. So what I'll do is I'll pause it and I'll go and change the settings, or I'll run a test without the strategy tester just to show what it's doing. So I'll pause the video in a sec. All right, what I'll do is I'll run the same test without it being in visual mode. So I'll take it out of visual mode and I'll just run the same test. So basically what you saw before, except without seeing the actual chart, and this will give you an idea of it in action. So just watch this while this, I know it's going to drag on a bit, this video, but it just gives you an idea of what it's doing with regards to the blue line's basically the balance and the green's the equity. It might be a little bit hard to see on the video. As long as you'll see spikes down. I can guarantee you'll probably see one somewhere. It happens all the time. So we're just trying to get a gradual rise up. And as you can see, this was over a year. It just keeps on going. It's not making a great deal of profit, but it's, you know, you look at, I didn't do any optimization on these figures. I just pulled some figures out of my clacker sort of thing, and it's only one pair on one time frame. So you could run multiple pairs or even the same pair on multiple time frames, just to give yourself a more balanced portfolio, change the settings a bit. And even though you might be only sort of getting, you know, a small percentage for a year, if you trade, you know, 20 pairs or something, multiple time frames, you could be doing a lot better. You can see the spikes down there. It's nothing to get too concerned about. They're still never gone below the actual start balance was down here. We've got a short time to go, so it's not a great return, obviously, but as I said, there's no thought went into these figures. There's just an example to show you what it's doing. And we'll just wait for it to finish. And there it is. You hear that funny noise. So there's your start and end. So it's only a couple of, you can go to the backtest results. You can see it's only $274 profit. Profit factor 4.69. There were 79 trades. Sharp ratio 1.65, which is good. And maximum drawdown on equity was only 1.21%. So no big deal on that. So that was a low conservative. but if you go in here and change the settings, this example, so we'll go to my preferred settings, 15813, see if that makes it. So we just have to change it to custom. They're already in there. Now let's have a look at the numbers here. So what was that? $274 profit and drawdown 1.21. Now if we just run the same test with these new settings, my more aggressive settings, I'm not even sure if this is going to work. Let's have a look. I guarantee you if it does work, you'll get more profit. Just because of bigger position sizing quicker, that's all. Whereas the conservative, the safe one was 111, what was it, 111238, whereas mine 1358. So already we made the same profit, and you can see here started off nicely. Now whether it maintains that, as I said, I put zero thought into the figures. I'm just testing something at random here. Hopefully it'll work. If not, I'll be doing another video. So, and these little, you want the little spikes because it tends to give you more profit. When it's flat like this, equity and the balance together, it just means it's just doing one or two trades and getting out. Whereas when you get this stuff like this, it means it's loading up a few trades and it's got potential for more profit. Now, I got a bit messy near the end on the first test, so we'll see how we go here. There's a spike down, nothing too bad. Yeah, it's making some decent profit. Not setting the world on fire, but like I said, this is just one pair. No thought into the settings. And we're going to finish shortly. Timer, just watch this line. The light gets darker and darker. All right, so it's finished. Not a bad sort of equity curve. And this is a back test, so don't take back tests as gospel. It's just an indication that something may work in the future, that's all. So there's 649, so decent, better return, about 3 times the return. Profit factor is even better, 5.27, roughly the same amount of trades, 77 trades. Sharp ratio is pretty good at 1.75 and probably doubled our risk, 2.49%. That's the main one I look at, equity on drawdown. If you're trading prop firms, that's something you'd have to look at. That's something you have to be aware of. So as long as you understand the concept of this, we'll go back to the charts. Where I find the chart. So it's when it goes above or below a level that it'll start looking for trades and go back to the midpoint. That's all it is. And all we have these indicators for is to help us with the entries and the number of trades, etc. Hope that all made some sense. As I said, I'll do more videos. I do apologise that there was a bit stop-start on the visual mode, but I've done previous videos on this setup, and there's not much more I can say about it. It's just what I sort of rattled on about before. There's just so many variables, so many settings you can change, like so much you can control in that. And I'd strongly suggest if you are going to trade the more aggressive settings, you stick to the higher time frames of that. And if you want to trade the lower time frames, I've been trading this thing live on 3-minute charts for about 3 months on one account. And at times there I was having nearly 200 trades open at one go. So it gets a bit messy, but it was a big account. I was trading small, so I was sort of smart about it, but it got a little bit ugly at times, and I was just sort of stress testing it. So it does work. But like any trading system, it's not perfect. There is risk involved. Be careful. It's not for everyone. It trades without stops, even though there is options to control that to some degree. When I said there's like filters to reduce the number of trades or close at certain times of the day. You can even set up with a trailing stop that's activated at plus 1 pip or something, and the trailing stop's automatically activated because most trades will go to at least plus 1 pip or something like that. So you can get a little bit creative with the settings, but as long as you understand the concept, the basic concept, it's like the rubber band, overbought, oversold, whether you agree with those terms or not, who cares? If it goes above the 60 level or whatever the high level is, it could be just a 51, it could be a 80, whatever. If it goes above that, it's looking for sell trades back to the midpoint area. If it goes below your low level, it's looking for buy trades. That's all it is. It's an oscillator. All right. Thank you for watching. If you do like these sort of trades, the way of trading, you can go to the, I'll put a link to the website in the description of the video. It shows you the pricing plans, any subscription fees, etc., and all the support, etc. we have for it. This is a fairly new EA, and we're looking at improving it and building it out, or different variations, etc. So there should be a lot more exciting stuff to come in the near future. All right, thanks for watching the video. Enjoy your day. Cheers.